Now, according to Advisory Services Manager for Africa Financial Institutions at the IFC, Naouar, technology propelled Africa to lead the globe in mobile money penetration, and therefore African regulators should leverage it in making their respective environments more conducive for fintech players. His comments came during a panel session on regulators at the Africa Financial Summit in Casablanca, Morocco. Let's have a look.
We are surrounded by two extremely good examples on how a run technology-based business can, with a strong value proposition and a brilliant client experience, can reach 1 million clients in a very short period of time and can grow regionally in a very short period of time and make big difference in promoting access to finance and financial inclusion. And you have Zach, who, if I take the last part, who built the technology based on a real experience, because lending, it's not an easy exercise. How you can support fintechs and banks, not only to be on the compliance side, but to grow the business by controlling fraud. So before I talk about IFC, I believe Africa is, in terms of how to leverage technology for financial inclusion, it's a very good example. Mobile money, we are the largest, highest penetration globally. We are at 40% of people included through mobile money. Mobile money, it's based technology. And regulation, it's also a nice lesson learned. It started in East Africa, grew up in East Africa, first in Kenya, then Uganda, then Tanzania. And thanks to a more flexible and seamless regulation in East Africa, it went faster than Western and Central. But once the Western and Central realized that they need to adopt a more adapted regulation, Senegal today, they are at 75% of financial inclusion penetration. Africa is at 58%. We used to be in 2014 at 17%. So there is a real growth and achievement. The problem is that we still have challenges. 500 million of Africans, they are not financially included. If you take the lending side, we have at least 45 million of SMEs not registered, and only the third of these 45 million has access to credit. If you include the informality, we are at 210 million. And all the idea is, because I believe, I think I've been working for IFC since 2013 promoting technology to support the development of the financial sectors, and more precisely, to develop access to financial services and credit by the MSMEs and by individuals. And we see that leveraging technology, it's something you cannot avoid. I just shared the data. The banks reached a limit, in my view, when we talk about 37% of financial inclusion. Beyond that, it needs to be played by technology. And when we say leveraging technology to transform access to finance, is if we like ourselves to grow or to fix the problem, we need to find a way on how, it doesn't matter if it's in 3 hours or in 1 day, but thanks to fraud detection and solution, because I'm sure that way, next thinking is to be more than mobile money players, which is a normal involvement of many fintech players we see in the market. In Nigeria, a fintech player like Fiducia, very small in the supply chain, they are at many hundreds of millions of dollars in business in a few years, partnered with banks. So how we can leverage technology to build the gap? We don't have another 30 years or 50 years to come in a panel like this and say 90% of the SMEs in Africa get access to credit. We don't think that we have the time for another 30 years to come back and say all the adults in our population at 90%, they have financial services. And it's evident that you cannot do it without leveraging technology. I give you another example. Spoke about Nigeria. In Nigeria, you have between 24 and 24 million farmers. They all have less than 1 hectare. They all produce 90% of what we eat in Nigeria. And they all have only 4% of access to loans. How you can fix and de-risk this to whoever provider in the financial sector, stakes, banks, microfinance, all the spectrum, NBFIs, if you don't leverage technology, and if you don't leverage technology on all its aspects, technology for credit scoring, technology for fraud detection, technology for financial service offering, etc. So that's what we try to promote with IFC. And it's not only about the private sector key players. We spoke when we tried to organize our preparation. credit infra is key. You know, in the WAMU zone, by the way, the regulatory needs to be flexible and seamless. And I think topics like QYC and like compliance, how we can help the fintech with a minimum of capital to progress. There's a lot of topics that we can invite our regulatory body to be more flexible and to help the market to build trust and to reduce compliance. But in the same side, when you hear Zach, it's not an easy exercise. So how we can find the right balance. But back to the credit infra, it's fundamental. Collateral registry, digital collateral registry in Ghana increased access to lending in 5 years by $100 billion. So technology, just to confirm for whoever is not yet convinced that technology within the ecosystem, in my view, we are gifted by it because it will help Africa, like the mobile money story, to really reduce these gaps. And for our population, for Africans, I think, let me repeat, I think it's very important to understand the message. Today, we have 45 million registered SMEs, only the third have access. Means, let me exactly the math, I think we have like 30 million SMEs that don't have access. Today, a structure like FC, we help like 500,000 SMEs in access to credit every year. So how many years we need for the 30 million?
A lot.
60 years or 40 or 30? With technology, they reached millions in few months. So this is not utopical, and that's, I think, it's very important. If I have something to share with the participants, it's technology today. It's what will enable us to resolve problems that we were not able to resolve in the past. Agriculture access to finance, individual access to finance. You know, the credit bureaus in the WAMU zone, I remember I was the project lead in 2016. At that time, the WAMU zone, it's 8 countries. So 8 countries with 100 million people. So at that time, only 800,000 people submit loan requests to more than 158 banks in the 8 countries. Today, thanks to the credit infra, to the credit bureaus, June 2025, 18.9 million people in the same WAMU zone access to loan, not submit a request to access to loan. So technology, if it's nicely designed, promoted, drafted, where we open the door for private initiative, really to be emancipated in the market, can help Africa to resolve access to finance inclusion faster than what